Creamer Media's Mining Weekly is interviewing Edward Stirk, the Director of Research of the World Platinum Investment Council, and we're chatting about the launch of platinum and palladium futures and options contracts on the Guangzhou Futures Exchange. Hi Ed, it's great to be able to chat to you once again. Will the launch of platinum palladium futures and options contracts on the Guangzhou Futures Exchange be positive for the platinum group metals business?
Martin, I think the answer to your question is yes, it's going to be a significant benefit in many different levels. So, to begin with, obviously, it'll increase liquidity in China, and it'll actually increase liquidity globally. If you look at the platinum trading volumes on the Shanghai Gold Exchange, as an example, they average only about 4 tons a week. Whereas if you look at, say, NYMEX trading volumes, it's more like 200 tons a week. So clearly, the ability to bring into play another derivatives market within China has the potential to massively scale up liquidity there. And obviously that makes platinum overall more accessible as an investment and also as an industrial metal to the end users within China. And in time, when the exchange is made available to international participants more broadly. On the topic of international participants, obviously this creates another avenue by which you can arbitrage the regional pricing differentials between London, New York, Japan, and China. And so again, that helps just overall increase liquidity and the availability of platinum to market participants. The other thing to bear in mind, of course, is that within China, there historically has not been an easily accessible way to manage price risk for end users. For example, jewelry manufacturers or the fabricators of investment products or automakers, they don't have the ability necessarily to easily manage their price risk. And as a result, particularly when it comes to jewelry and investment products, you tend to see quite a big premium on the selling price and quite a big discount on the buyback. Now, the ability to manage price risk should allow for the premium discount spread to close. And that's only likely to help consumers gain confidence in platinum and bring more consumers into the investment and jewelry space.
And why are some analysts expressing the belief that the availability of platinum and palladium in the form of both ingot and sponge will be transformative?
Ingot is the traditional form. So if you look at the CME, for example, or NYMEX, that's the good delivery bars there are they're ingot, they're 50-ounce bars. So the innovative thing that the Guangzhou Futures Exchange is bringing in is the ability to take delivery in sponge. And that's particularly useful for certain end users, particularly automakers and industrial end users who actually want metal in sponge form in order to make catalysts, for example. And so this, I guess, kind of is a bit of a shortcut route for them. They don't need to buy bars and then convert it into sponge. They can get sponge directly through the exchange. And so, that makes their life easier and maybe reduces their operating costs to a degree and potentially accelerates the usage of platinum overall.
And these developments are rising, amid a period of significant structural adjustment in China's platinum market, following the removal of VAT exemption on platinum imports, which I think took place on November the 1st. Is this also a plus for platinum, these structural changes?
I think overall it is. There's been quite widespread VAT reform within China. It's not just platinum that's been impacted. It's also impacted gold, and we can come back to that in a second. But effectively what's happened, just to explain the change, is previously, if you bought platinum through the Shanghai Gold Exchange, you paid a 3% service fee effectively, but you got a 13% VAT exemption. And that was important for certain end users who care about VAT, which would be jewelers, investment product manufacturers, and so on. And that exemption has now been revoked. If you bought platinum by importing it directly into China or through the secondary market, then that exemption wasn't in place. So effectively, this VAT change levels the playing field within China between the Shanghai Gold Exchange market and the OTC or direct import market. Now, initially, if you increase the price of something, which is effectively what this does, that's potentially slightly negative for demand. There's a certain degree of price sensitivity. But overall, we expect this to result in an improved secondary market in China which will make metal more accessible more broadly. Now, I touched on gold a moment ago. The VAT changes to gold are a bit more complex, but effectively, the majority of gold's VAT exemption has also been revoked. And so this creates a more level playing field between platinum and between gold as well. Now, considering that gold is still trading at a significant premium to platinum, and that's proven to be quite damaging for things like gold investment demand in China and jewelry demand, we still see platinum as being fundamentally better placed than gold from a price perspective, and therefore more competitive and more attractive to consumers within China.
And you mentioned NYMEX, but I'd just like to know about the other futures exchanges. How are they faring?
Well, it depends on the exchange you look at. If you look at NYMEX, which is part of the CME group, volumes have doubled over the last 5 years. Options volumes, I think, were up something like 200% in January of this year on year. So, overall, the kind of open interest and the volumes and the trading levels have been increasing pretty significantly, reflecting, I think, growing interest in platinum. And, effectively, we're seeing much greater liquidity, which is encouraging. If you look at Osaka, the Osaka exchange, there things have not been quite so healthy. So volumes there are not quite what they used to be. They have picked up recently, but not back to historical levels.
And finally, Ed, what would you say is the big takeaway?
I think the main takeaway here is that the advent of the Guangzhou Futures Exchange opens up China from an investment perspective. The exchange itself will be available to retail investors through their brokers. And so, certainly we could see some interesting retail interest in platinum as a result of that. It creates that ability to manage price risk in China, which is positive ultimately for end market demand. And I think, more broadly and holistically, China's the biggest market in the world for PGMs, as it is in many commodities. But because of the structure and the closed nature of the market to date, China's kind of been a price taker. And with the exception of their import volumes, there hasn't been anything there that kind of has a bearing on international price discovery. And the launch of the Guangzhou Futures Exchange and the fact that it's open to international participation means that China's future demand expectations can begin to be reflected in that price discovery process. And I think that's overall going to be quite beneficial to the market.
That was Crew Media's Mining Weekly, speaking to Edward Stirk, the Director of Research of the World Platinum Investment Council.